Okay, guys, so sorry for the delay this morning. Let's get the briefing up and running. Just as I'm speaking, before we kind of get into the macro of everything, just seeing a kind of reversal in stocks here, and I've got the Eurostoxx chart top left, the DAX top right, S&P bottom left, but Eurostoxx particularly here just leading the way. Now we're about to test yesterday's high. So yesterday afternoon, Eurostoxx topped out 3,042. So we've just had now a real kind of reversal in fortunes here, because we had a pretty negative European cash open. In fact, particularly on the DAX is probably the best example, because we had a real squeeze lower here this morning that took us actually right down on the DAX to dip below 10,600 briefly, and here we are now turned, and we're back up and looking at testing the high of the day, with Eurostoxx new highs and about to test yesterday's high. For the DAX, that moved lower earlier, just a bit on the technical situation. If I make this chart a little bigger, the DAX broke back below the high point that we had back on Friday, which was at 10,616, and perhaps that just opened the door to a little bit of a technical push lower. Of course, this is all reversed now, and as I said, Eurostoxx about to test yesterday's high. For Eurostoxx, if you're thinking about yesterday's high, looking on a more longer time frame, a daily chart, yesterday's move was quite important. We broke up above last week's double top for Eurostoxx. So the 24th of August and the 26th of August, highs at 3,017. We broke that yesterday, and Eurostoxx looking to take out, or at least test yesterday's high. The key level, or the key price point, is the high of the month set on the 15th. That's at 3,065. And as you can see on this chart, it's just real top end of the range when you're looking back over the longer term. If we look at a weekly time frame, then you can see that 2016 has been very well behaved from a technical point of view. We've got a big double bottom down around 2,650 area. That was the low we had start of February, and then again the low when we dipped off the back of Brexit. And then on the top side, we've got if anything, a slightly downward trending sort of top part to this range. But anything up towards the mid-August high, and we're going to begin to flirt with the very highest points traded this year. Okay, so that's the kind of technical picture for Eurostoxx. Obviously, and before we actually just staying on the theme of the longer term here, we're looking at the S&P a lot, and of course the S&P's up at all-time ever highs. Just to get this in perspective, what's the different valuations between, let's say, the S&P 500 equity market and then the Eurostoxx 50. And when you're looking at the Eurostoxx, so remember, the S&P is trading at an all-time high, basically. Well, the Eurostoxx here is trading at 3,042. That puts us at 700 points below last year's high. This is a massive discount on a relative basis to what's going on across the Atlantic. More than that, if you look at this on a monthly chart, let me see, I'm not sure how far I can go back here. Yeah, here we go. So if we take in the crisis, the 2015 high for Eurostoxx, 3,769, as I mentioned, but actually the pre-crisis high set before the financial crisis is up at 4,600. So we're actually a full, pretty much 1,600 points off that top. The S&P is 30% and more, in fact, above the 2007 high, whereas Eurostoxx are actually not even halfway back. If you put a fib series on the crisis fallout for Eurostoxx, let's just do this quickly. That's the crisis move, which dropped from 4,600 down to 1,750. And right now we are trading below, and in fact we've been trading below the 50% fib of the crisis range for the whole of 2016. So just to get this into perspective, when you're thinking about one index relative to another, let's just do a long-term S&P chart just to hammer home my point here and go back to pre-crisis levels. So the equivalent pre-crisis top for the S&P is down here. It's at 1586. And so, I'll put a fib series on the S&P's sell-off during the crisis. And, obviously we've not only fully retraced, we've then gone and added well over 30, if not 40% to the upside. So on a relative basis, Europe, and especially Euro stocks, definitely incredibly cheap relative to US equities on a kind of valuation basis, and looking back at pre-crisis levels and so on. There's a reason for this. Europe got damaged way more than the US did. Europe, of course, had a double whammy, not only the global financial crisis, the fallout from the Lehman Brothers collapse, but then a few years worth of Eurozone debt crisis added into the mix. But anyway, sorry, slight tangent there into the long term. Just on this morning, what's happening? Well, I said we had a bit of negativity off the open. At 8 a.m. we dipped, new lows for the session. Now we've reversed, as I've mentioned. So something that helped with that perhaps is the ABN AMRO comment. So ABN AMRO analysts are forecasting that the ECB, and I think I mentioned this yesterday, the ECB will extend. So ABN AMRO think ECB will extend their QE program by a further 6 months. Currently their program's due to end March 2017. I think I said this yesterday, that actually, we're approaching, getting to almost, not quite, but almost 6 months away from the finish line for that program. And it may, certainly conditions are not yet, the ECB have not done their job, let's say. So they don't want to get too close to that finish line without reassuring us that actually they're going to extend it. So I would say before the end of the year, and most likely, well, there's speculation they might do it next week at their meeting. It might be the week after, it might be the meeting after that. But look out for chat next week about the ECB potentially extending their program, and if they do, 6 months is the most likely, given that that's the kind of time frames they've used before. Okay, so something to think about, but that's perhaps helped with just a little bit of a reversal in fortunes here on equities, and a turn and a test to the highs for a lot of these markets. Okay, so for the S&P, that's around the pivot level, which has been a solid barrier all day, right the way through the Asian session, and indeed this was the area, pretty much the same pivot level as yesterday, which was key resistance after the sell-off. So we definitely had US equities under pressure yesterday, breaking below the pivot off the cash open and then remaining in negative territory. We got a little bit of a bounce into the close in the end. But I guess two themes from yesterday with regards to the US. One negative, and that was Apple's, the Apple news that the European Commission have ruled that Apple are due to pay 13 billion euros in back taxes. Of course, this is going to get appealed, and this will take years. Don't think Tim Cook's getting his checkbook out anytime soon, if ever. So anyway, that just weighed not only on Apple, but actually on the tech sector, the other kind of tech multinationals like Google, Facebook and the like. So they came under a bit of pressure. But to kind of counter that, we had some pretty solid data. 3 p.m. yesterday, consumer confidence in the US rising above 100, nice and positive. So kind of contradictory forces there, but in the end the S&P certainly closed lower, and we had a down day, and we got our kind of theme right across all markets really. We were short across all 4 products in our US strategy yesterday, which was the right call, because we did get dollar strength. If I just show you the currency markets, so we got euro dollar top left, we got cable top right, and then we got dollar yen bottom left. I got the dollar yen on a daily chart. I'll talk about that separately in a minute, but if you're certainly looking at euro versus the dollar, this downward trending theme continued yesterday, as we expected. We didn't quite catch the entry point, our entry point not quite aggressive enough in the end, through yesterday afternoon. After we kind of broke it, it was really that low point we had on the 29th. Monday's low was the kind of resistance point. That was the price point that in the end turned out to be the right short entry point, picking off the top of the range as we drifted lower. So some dollar strength yesterday. Just looking at cable though, it's a lot more sideways. We're in actually a very well-defined range for cable that you might want to have a look at today. So anything up around 131.20 to kind of 131.25, that's the top end of the range, very well defined. And then the bottom side, triple bottom for the week at 130.65. So incredibly well defined range. We're in the middle of it at the moment though. So we're around the 131 handle, but certainly any movement to either extreme of this week's range, and this looks pretty solid, and perhaps good range-bound trading opportunity will present itself. But look at the bottom left chart, daily for dollar yen. This is an important and quite a key break. So technically yesterday, yen weakness as well as dollar strength, taking us up new highs for the month, breaking the 8th of August high, and we've added to that this morning. Okay, now this is off the back of the news I reported yesterday that, or even the news over the weekend, I guess, that the Bank of Japan are going to do more. Okay, so this is just pricing that in. So this is the weakest the yen has been now since the end of July. Japanese equities benefiting from this. I'll talk about Japanese equities later on in the session. I want to talk about the Bank of Japan's QE program, where they're currently buying Japanese ETFs, and it's quite staggering the volumes in which they're going to be buying Japanese equities out over the next 12 months. So we'll talk about that later. But yeah, for now, just be aware that the yen is certainly on the move, having flirted with the 100 handle for a couple of weeks. We definitely had a solid rejection at that, and now we're heading quite sharply back higher with some key technical breaks, particularly yesterday. All right, that's on the currency space. Checking out oil, let's look at the top right chart. Certainly oil under pressure yesterday, as we expected. Dollar strength certainly helping with that. Bit of confliction in terms of the news flow, because we've been what had been supporting oil. If we just quickly, let me just enlarge this chart, just quickly go to the daily. What's been kind of shaping the market back lower, moving back away from 49 bucks, has been this news flow that Iran are keen on joining the meeting in September, and perhaps we're going to get an output freeze. Well, yesterday they contradicted themselves quite dramatically in that they said that they're looking at increasing production to 4 million barrels a day by the end of the year, which means that they're absolutely not interested in freezing output. So this kind of downplays the idea we're going to get an output freeze. So more supply, price comes down. However, to counter that, Iraq did say that they were interested in an output freeze deal. So the kind of circus of OPEC commentary continues. But I'd say it's the Iranian comment yesterday that helped on the downside. We got just on oil inventory data. We're going to get the news this afternoon at 3:30. We'll get news from the Department of Energy as usual. But here are the figures that we had last night from the API, and we got a build on crude. We got drawdowns on Cushing. We got a drawdown on gasoline, and quite a big build on distillates. So actually, the kind of the main news was probably the distillate build. Look at all these other ones. It's very, very tiny numbers. Very much well within ranges of recent weeks for all of them, apart from distillates, where we've actually ticked up, and we've had really since the start of the year, that's the third highest build on distillates, really, in the last 8 months. So that kind of grabbed the headlines, if you like, and that just helped to just tickle things a little lower. If I go back to the daily chart, we had a break last night. We had a sharp move around about 11 o'clock at the Asian session get-go, and this was most likely just triggered by a technical break of yesterday's low, and then a break below 46 bucks. It was quite quickly reversed, as you can see. This candle, this 11 o'clock candle from last night, very long bottom wick. But what's happened since, we've been drifting sideways, and again now just favouring, or it seems like, just favouring the downside again. But yeah, certainly all on the back foot. Dollar strength helping with that as well. And we'll get Department of Energy numbers from the US at 3:30. Let's look at the data calendar for the session then. And so we've just had the German employment figures. Employment levels in Germany, not an issue. So this kind of stuff isn't particularly market sensitive. For what it's worth, the unemployment rate was in line, unchanged at 6.1%. So these German numbers not important. The Italian employment number in stark contrast, rather than being 6.1% like Germany's at 11.4%, but that did decline. So that's better than expected from Italy. So 11.4% coming in below the expected 11.6. But we've had the 9 a.m. data. So really the next thing on the slate's then going to be 10 o'clock, European inflation. So we had German numbers yesterday that all seem to edge slightly lower than the previous month, certainly on a month-on-month measure. Today we're expecting the headline annualized CPI reading for August to come in at plus 0.3%, which is actually higher than the month of July. If we just look at the chart on this is Eurozone inflation. If it is right, and it does come in line with expected, then that would match the best reading of the whole year, or I should say the highest reading of the whole year, which was back in January. And let me just go to a 5-year time frame, because plus 0.3%, we haven't been above plus 0.3%. You've really got to go back to, 2014. Now, this has been a real problem, obviously, for the ECB. This downward trending inflation into negative territory. This is why we have quantitative easing. But you would say, over the longer term, this does look like it's flattening off. We do have inflation levels here, and if it's right, plus 0.3, that's basically, roughly a 2-year high. So for 2 years, this inflation data has been flat. So you'd say on the longer term here, this is flattening off. I think it's way too early to be confident the deflation trap has been avoided, but plus 0.3 here today would be quite encouraging. It's just that, will that happen, given that the German numbers yesterday gave us a little hint that actually inflation conditions drop slightly. So we'll see at 10 o'clock, Eurozone inflation. The other stuff this afternoon of importance, there's quite a busy calendar this afternoon. ADP Employment. This is going to hit the wires 1:15. We're expecting 175,000. This is private sector job creation. 175,000, basically in line with the last few months. This is, some see it as a warm-up for Friday's payrolls number. I say in the last couple of months it's been a terrible lead indicator, so I don't anticipate this data at 1:15 to really drive much reaction, given that it's not been a good indicator. If I was to show you the payrolls chart, look how solid and consistent these numbers have been over the last 3 months with payrolls. I mean, look, just take the month of May, right? Let's just take the month of May. Payrolls, an absolute disaster. 7-year low, 24,000 in May. May ADP, 168,000. Quite a nice lift from April, okay? What about June ADP? Slight increase, certainly nowhere near new highs for the year. That's for June ADP. Non-farm payrolls non-farm payrolls for June, massive print, highs for the year, matching the highest levels we saw at the end of last year, which were some of the best readings we've seen in years and years. So you get my point here. The correlation between non-farm payrolls and ADP has been weak. So don't expect it to all of a sudden be amazingly strong now. And therefore you're going to get a lot of skepticism. Whatever the ADP throws up at 1:15, bear in mind it has not been a lead indicator. So it may not get much market reaction. What else have we got this afternoon? Chicago PMI, this is an important print. We're expecting 54, slight drop from last month's 55.8. And then pending home sales at the same time. But certainly Chicago PMI, the more important there at 245. And then we get the oil data at 330. Usual raft of speakers from central banks. I think we've had Rosengren speak already, although I can't see. Yeah, I have seen. So Rosengren stated that the timing of a rate increase should depend on the timing of financial stability, adding the Fed are close to achieving their inflation and job mandate. Fed's Evans earlier also said that he states that protracted period of low interest rates is seen ahead. So he's been very dovish, as normal. Fisher yesterday, he was the guy on Friday that really set the cat amongst the pigeons by basically saying that what Yellen said is absolutely in line with a September hike and 2 hikes this year. He very much backtracked from that yesterday and was a lot more vague, but still we got some dollar strength. So anyway, Kashkari's talking this afternoon. He's considered to be neutral. He's talking about the role of the Fed. There is a Q&A with this session, so we might get asked, so there may well be some comments from him. Villeroy is from the ECB and he's talking. On the bond auction front, maybe of note, Schatz auction, that's German 2-year bonds, that's coming at 10:30. So that's the data. Back to the charts, just to finish off, oil is just still a bit under pressure. Look for the $46 handle and a move below there. Stocks for now having rebounded, just finding a little bit of resistance. I mentioned the Euro stocks testing yesterday's high. We have broken it, but we're just hanging around that price point at the moment. So let's see how we go. Other stuff that we're going to cover in the session. I want to talk about Japan's ETF bond buying program. I want to talk about electric vehicles as well, and the ramifications of electric vehicles to oil demand over the longer term. All right, so some other stuff we'll talk about later, but for now, let's crack on. 10 a.m. Eurozone inflation data, the next kind of important thing on the calendar. Enjoy the day.